Good morning, everyone. Today we are going to do the third part of custom valuation. Let's first see the latest news related to the customs and goods and service tax. Then we will start with the topic. CBIC orders custom refunds and drawbacks for pending income tax, goods and service tax, and custom refunds to individual and for the businesses. About 50% of the amount is estimated to be GST and custom refunds, officials said. The directive to field offices follow the finance ministry on Wednesday order of immediate releasing of around 18,000 crore in pending income tax, GST and custom refunds. The focus on refund and drawbacks is aimed at providing immediate relief to business entities, especially the MSMEs. What is the full form of MSMEs? Micro, small and medium enterprises. And for the facilitation of exporters, all communication should be done over email, whether email ID of the applicant is available. The CBI said due diligence will be done before sanctioning any refund claim. This special refund and drawback disposal drive will go on till April 30, issuing the pending refunds for the benefits to be given to the MSMEs. In the last lecture, I have given you one task to solve. I hope you have solved the question. Let's read the question first. The material was imported by air. Air is the important point here. At CIF, where price of 5,000 US dollar, freight was 1,500 US dollar, insurance cost was 500 US dollar. The banker realized the payment from importer at the exchange rate of 71 per dollar. We need not to see the banker's value. The Central Board of Excise and Custom notified the exchange rate at 70. Yes, I'm going to look for CBIC exchange rate value only. Though the similar question we have solved in the previous video, but I'm going to show you the answer for this one also. We will first calculate the go back by the reverse method and calculate the FOB value, whether the prices here entered are correct or not, to check that. So as CIF value given is 5,000 US dollar less freight, which is given in the question is 1,500 US dollar less insurance 500 US dollar. Then we come to the FOB for custom value, which is 3,000 US dollar. Now, as per the rule, we have to make notes also in the question. Why we have to make the notes for this case is if we are importing the goods by air, the maximum freight can be 20% of FOB. If the freight of air is given, then we will choose whichever is less, actual freight given or 20% of FOB. So you have to mention the note in the exam also, making the working note, right? So working note in the calculation 20% of FOB is 600 US dollar, whereas it was earlier calculated about 1,500 US dollar, which we will not consider now. So freight is now taken as 600 US dollar, whereas insurance value is taken as actual value, which was taken earlier also. Reason is, as per the rules and regulation, if insurance value is given, actual value is given, we will take the actual value. If it is not given, then we can go for 1.125% of value of FOB. After adding these two, we get the CIF for the custom purpose. We will multiply this with 70. In the note, we will give the reason why I have taken the CBIC value as per the rules. Then we multiply it, and by multiplying we get the accessible value, which is 2,87,000 rupees. Next important question is Foreign Trade International Limited has imported one machine from England. It has given the following particulars: price of machine 8,000 UK pound, freight paid by air. Whenever air comes, I have to check whether it is 20% of FOB. If it is less than 20% of FOB, then also I have to take this value. If it is more than 20% of FOB, then whatever is the 20% of FOB, that value will be taken. Design and development charges paid in UK, 500 UK pound given. Commission paid to local agent of exporter 2% of price of machine in Indian rupees. Then bill of entry is given. Date of arrival of aircraft is given. Integrated tax leviable under section 3 subsection 7. Why I quote this section every time? If you get a theory question or if you get a question in exam, try to remember the section, right? It create impacts on the evaluator always. So integrated tax, it is given 12%. Insurance charges have been actually paid, but details are not available. No problem. If insurance charge is not given, I will take 1.125% of value of FOB, right? Compute the total custom duty, integrated tax payable by Foreign Trade International Limited, which is the name of the company. Note, ignore GST compensation cess. Let's get to the solution fast. Price of machinery was given 8,000 UK pound. We have taken that. Design and development charges. Now, why we require note here? If you remember, we have done commission paid to local agent if it is a buying commission or is not to be included. Since it is not a buying commission, so that's why it is added. So after adding the buying commission, we get the value. We convert it into Indian rupees. Now, how we convert it into Indian rupees? We will take the rate of CBIC that we already know. But which rate? Is there any different rates also given? Yes, there are two rates given. 100 per UK pound also given by CBIC and 98 per UK pound also given by CBIC. But we have taken 100 rupees per pound. Why? Because we have to take the rate on the date of presentation of bill of entry has to be considered. So that's why we have multiplied it by 100. So we have now the value 8,50,000. Now add local agency commission 2% of 8,000 UK pound, which is 160 UK pound, multiplied by 100, we got 16,000 rupees. Now FOB value as per customs comes is 8,66,000 rupees. Now air freight has to be added. So we will calculate the both value. Air freight given in the question is 2,500 UK pound, whereas the 20% of FOB value, which is this 8,66,000. Though I have done my calculation, but for your reference purpose, I am showing the freight given is 2,500 UK pound, multiplied by 100 comes 2,50,000 rupees, whereas we have calculated the 20% of 8,66,000. Why we have calculated for 8,66,000? Because this is the FOB value. 20% of 8,66,000 comes as 1,73,200 rupees. So whichever is less, we will take 1,73,200 rupees as a freight, which we have taken here. Calculation done in the note 3. Then insurance charges, as the insurance charges was not given, we will take 1.125% of custom FOB value, for which we have done the calculation in the note 4. You can do it, which comes 9,742 rupees and 50 paisa. Then after adding these two, we come to the CIF value. This is the CIF value. As earlier notification, just to remind you again, loading charges were usually added previous to the notification of the government in the CIF value. After adding that loading charges, we come to the accessible value. But as per the latest notification, that loading unloading charges has not to be added into the CIF value. So the CIF value and the accessible value are similar almost, but we have to quote differently. Then basic custom duty is calculated on accessible value. We have done our calculation in note 5. 10% of 10,48,942, which comes 1,48,900, 1,04,894 and 20 paisa. Then social welfare surcharge, even if it is not given, by default I have to calculate always on the value of BCD. SWS is always calculated on the value of BCD, basic custom duty, which comes 10,489.42 paisa. After adding all these value, accessible value plus basic custom duty plus social welfare surcharge, we will calculate the integrated tax, which comes 1,39,719 and 7 paisa. Now, if in the question they have asked what is the total duty paid. In the total duty paid, we have to first add the basic custom duty, which is 1,04,000, then SWS, then we have to add integrated tax, which comes 2,55,102 rupees is the total duty paid. Okay, so we have a next question now. Compute the total duty integrated tax payable under the custom law as an imported equipment based on the following information. Assessable value, oh, what a relief. Assessable value is already calculated. That is 10,000 US dollar. Then bill of entry is on 25th April. Year can be taken. Basic custom duty on this date is 10%. And exchange rate notified by Central Board of Excise and Custom on the same date for $1 is 65 rupees. Then date of entry inward is on 21st April, right? This and this is given. Custom duty on the date is 20% and exchange rate notified by Central Board of Excise and Custom is for given is US $1 is 70 rupees. Integrated tax payable under section 3 subsection 7, always remember, of Custom Tariff Act 1975 given is 12%, social welfare surcharge 10%. Even if this is not given in the question, by default we are going to calculate social welfare surcharge, which replaced education cess and secondary and higher education cess under Custom Act. Make suitable assumptions where required and show the relevant working. Round off your answer to the nearest rupee. Ignore GST compensation cess. Now again, as per the only confusion is which rate I should take. 65 rupees dollar should I take or 70 rupees? Needless to say again, the rate of exchange notified by CBISC as prevalent on the date of filing of bill of entry. Bill of entry. Bill of entry is filed here, so exchange rate will be taken is 65 rupees for $1. Now, second question. Which basic custom duty should I take? 10% or 20%? Pause the video, try to remember which duty to be taken. Okay, the answer is rate of duty would be the rate as prevalent on the date of, yes, filing of bill of entry or entry inward, whichever is later. Which is later, 25th April or 21st April? Obviously 25th April is later, so 10% of basic custom duty. That's it. This is what confusing point here in the question is. Other part is very simple. So let's get to the solution now. Assessable value 65 we have already discussed. You can write down in note 1 how this 65 has been chosen. So 6,56,500 is the value in Indian rupees. Then basic custom duty. Basic custom duty we have chosen 10%. We have already discussed. You can write down in note 2 how we have chosen this value, which comes 65,650. We have to calculate SWS on the value of basic custom duty at the rate 10%, so which comes 6,565. Total of all these is, these three figure is 7,28,715. Right, on this total value we are going to calculate integrated tax under section 3 subsection 7, which is given 12%. In note 3 you can show the calculation. I cannot show it here due to the less space. Then it comes 87,445.80. Total custom duty payable is basic custom duty plus SWS plus integrated tax, which comes 1,59,660 rupees. This value has been rounded off. Right? Okay. So next question. Assessable value, very simple question. This question can be asked in 5 marks also. Assessable value of an item imported is 1 lakh. Basic custom duty is 10%. Integrated tax leviable under section 3 subsection 7 of Custom Tariff Act 12%. Social welfare surcharge 10%. Even if SWS, I remind every time, even if SWS S is not given in the question. We are going to calculate it, right? Calculate the amount of total custom duty and integrated tax payable. Very simple. We will calculate 10% of accessible value, which will come 10,000 rupees. Basic custom duty come is 10,000 rupees. Then SWS is calculated. SWS is calculated on BCD. 10% of 10,000 is 1,000, right? Then to calculate IGST, we have to add accessible value plus basic custom duty plus this SWS. On this, we will calculate the 12% value. After calculating that value, we can add all to calculate the total tax payable. Here I am going to show you the solution. Accessible value 1 lakh, basic custom duty calculated on this value, social welfare calculated on BCD. We get total is 1,11,000 rupees. Integrated tax 12% is calculated on this value, which comes 13,320. To calculate the total tax payable, BCD plus SWS plus IGST. This is not the total value. This is the total tax payable. After total tax payable, if in the question it is asked, what is the total value paid by the importer? Then in these three values, we have to add accessible value also, right? Which is 1 lakh in this case. That after adding accessible value, we will get the total value paid by the importer, which is 1,24,320. Now time to do a task at home, right? So this is a task. After this lecture, you are going to solve this question. I read the question once for you. From the following particulars, calculate the total custom duty payable and integrated tax payable. Date of presentation of bill of entry is 20th June. Rate of BCD given 20%. Interbank exchange is given. Here I am not going to give you the hint any today. Rate of notified by the CBIC is also given 70, 61.60. Here are 4 rates given now. Then the date of arrival of aircraft in India is given, which is 30th June. Rate of BCD is given. Interbank exchange rate is given. CBIC rate is given. Rate of integrated tax under section 3 subsection 7 of custom tariff act 12% is given. It's written ignore compensation. GST compensation says even if it is not written ignore it, we are going to ignore it, right? Until and unless specified GST compensation says, only then we will calculate it. But about this, even if this value is not given, we are going to calculate SWS 10% on the value of BCD. So CI value given is 2,000 US dollar, air freight given 500 US dollar, insurance cost given 100 US dollar, landing charge is not ascertainable. I hope you will be able to solve this question. I will give you the solution in the fourth part of the lecture. Let's now discuss some of the important MCQs. First MCQ is the board fixes tariff value for goods imported by Mr. Palash, but he filed the bill of entry on the basis of transaction value. The custom officer rejected the bill of entry of Mr. Rohan on the contention that the transaction value cannot be accepted for those goods for which board has given tariff value. Now you have to find out of the 4 options whether the contention of officer is invalid, whether the contention of officer is valid, whether the contention of Mr. Palash is valid, or last option both A and C. If you have studied the previous part of videos, well, you would have answered at instantly. Option answer is B is correct. Officer is very well compliant with the laws. Law says if the tariff value is given, we will not calculate the transaction value. Option B is the correct answer for this case. Next MCQ is Mr. Abdesh enters into a contract with the supplier of USA to purchase goods after 4 months. The contract price was 8 lakh rupees. Due to the recession in international market, the prices of goods reduced to 6,50,000 rupees. The special discount offered by the seller to Mr. Abdesh was 50,000. Such special discount is not offered generally to all the buyers. Identify the transaction value to be declared by Mr. Abdesh on his bill of entry. Please think. Simple. The contract price is 8 lakh rupees. On this contract price, Mr. Abdesh is given 50,000 rupees discount. 8 lakh minus 50,000 rupees, 7 lakh 50,000 is the transaction value. We have nothing to do with what international prices are. Okay, so option B is the correct answer here. Don't keep on guessing that in the two subsequent MCQs, our option is B, that you will be guessing the B option in this case also. Let's see. Question is, adjustment in transaction value as per the rule 10 includes 5 options given: free assistance by the buyer in the form of goods and services, molds and dyes supplied at a reduced cost by the buyer, buying commission paid to the local agent, engineering and design work undertaken in India, transport charges paid as a condition of sale by the buyer on behalf of the seller. Adjustment in transaction value, which includes out of these 5 points given, which are to be included. Okay, so buying commission paid to the local agent, and the transaction value, no. Fifth option will not be taken. Yes. Fourth option, engineering design work undertaken in India. These 2 points. So according to this, option D is correct. All of the above except these 2 points, we will be going to take the answer. I repeat, all of the above except these: buying commission never taken, engineering and design work undertaken in India. Any work taken in India, why this is to be taken? So answer option is taken as D. Next MCQ, which of the following is not included in the transaction value? 5 options are given: commission paid to canalizing agent, buying commission, it is not added, right? Then cost of container, which is non-refundable, right? Then engineering and artwork undertaken in India. Work taken in India, why it is to be taken? No. Then dividend distributed by seller to the buyer, whether it will be taken or not? No, no dividend distribution here. We are not talking about the distribution of the profits or sharing the profit by the term dividend. No. So these 3 options are not taken. Find out which is the option here. Yes, correct answer is B. Next MCQ is, Ajanta Limited imported wristwatches from USA for 15 lakh. The cost of import through vessel is not ascertainable, but the sum of free on board value of goods and the cost of insurance is 15 lakh 35,000 or 15.35 lakh. Calculate the cost of transportation in case of Ajanta Limited. Please do your calculation. The answer is 3,07,000. If you do not understand how this has been calculated, please comment. I will show you the calculation. Thank you everyone. In the next lecture, we are going to solve few more couple of questions related to custom valuation, which will clarify any of your doubt if still is there. And after that, we are going to start a very important topic, that is import procedure and export procedure under customs. Thank you everyone. God bless you.